Italy a great deal. You know, the recovery there is one of the weakest in the Eurozone, so every little piece of policy bound to potentially kill the economy could have been very detrimental. So generally speaking, of course, that the fact that the taxpayer has to step in here is not positive, but the fact that the problems are contained and that they are concentrated in Italy is also quite good for the rest of the region.
All right, just before I let you go, Conrad, the European Union lawmakers have backed new rules that would force large multinationals operating within the bloc to give detailed information on where profits are made and, of course, prevent them from reducing tax bills. Is this a welcoming news for the market?
Well, not entirely, Jimmy. You know, the taxes that some of those multinationals don't pay are the earnings, or at least parts of the earnings, those multinationals can report to their shareholders. There are quite a few people out here on the financial markets who believe that tax avoidance, or at least, professional tax reduction, is a legitimate part of business. On the other hand, of course, you also find people who think that also multinationals should pay their taxes in a just and fair manner. And for them, this piece of legislation by the EU Parliament is a piece of good news. Although there are loopholes, companies can demand to be exempt, at least temporarily, if they think that, business secrets are at risk. And also, as always in Europe, this legislation has to be implemented into national law by all of the EU members before it really becomes law everywhere. So I think we can get prepared for a great deal of discussion about this here in Europe before this really will see the light and will be implemented for the multinationals.
Well, I'm sure looking forward to that discussions, Conrad. Thank you very much for your time, and do enjoy the rest of the day. We move on now to the U.S., where the stock index futures pointed to a mixed open as traders await the release of the Federal Reserve's latest minutes. On the data front, Wednesday will see factory orders for May released at around 10 a.m. Eastern Time, while the much anticipated release of last month's FOMC meeting is set for around 2 p.m. The minutes from the June 14 meeting, when the FOMC raised rates for a second time this year and revealed details on how it intends to gradually begin powering back its more than $4.5 trillion balance sheet. The markets have doubted the Fed will hike rates for a third time this year, giving just about 50% odds for September rate rise. Looking at those futures numbers there, we have the Dow Industrial Average looking up 0.01%. That's just basically flat there. S&P 500 0.02%, also flat, and Nasdaq down 0.22%. In Asia, the bosses there shrugged off geopolitical concerns on the Korean Peninsula today, turning positive after early cautious trading. The Nikkei 225 erased earlier losses to close higher by 0.25%. The Australian ASX 200 finished the session down 0.35%. South Korea's benchmark Kospi index reversed losses, rising 0.33%. Greater China markets rose modestly as markets digested the release of Kaizen Services PMI data for the month of June. The Hang Seng index gained 0.34%. On the mainland, the Shanghai Composite advanced 0.76% and the Shenzhen Composite rose 0.87%. To commodities now, oil dipped today, pulled down by another rise in OPEC supplies despite a pledge to cut production. But geopolitical tensions in the Korean Peninsula and the Middle East put a floor under prices. Brent crude futures, the international benchmark for oil prices, were at $49.55 per barrel, down 6 cents for their last close. And the U.S. West Texas Intermediate crude futures were at $46.99 per barrel, down 8 cents. Now, despite the dips, both markets have recovered around 12% from recent lows on June 21, although crude prices seem locked below $50 per barrel. To precious metals now, gold prices edged up as today as tensions on the Korean Peninsula stoked safe haven demand for the metal, while the release of minutes from the U.S. Federal Reserve's last meeting was also in focus. Spot gold had risen 0.3% to $1,227 per ounce. U.S. gold futures for August delivery climbed 0.7% to $1,227.10 per ounce, and gold is seen as a store of value and therefore a safe haven investment in times of economic and political uncertainty, when investors tend to sell riskier assets such as stocks. And in Gambia, the oil minister there has confirmed that the West African nation has ended talks to extend the exploration rights of Oslo-listed African Petroleum for 2 offshore oil blocks. But African Petroleum, which maintains that it still holds the legal rights to the licenses, has not responded to this yet. In Congo, the economy is likely to shrink for a second consecutive year, with the government forecasting a 1.9% contraction in 2017, a downgrade from its earlier projection of 1% growth. The finance minister says the economy had been hit by lower than expected oil production due to the aging of many of the oil fields currently in production. However, new oil projects, including Total's Moho Nord, which came online in March, are scheduled to boost output by 25% to 350,000 barrels per day next year as they ramp up production. Congo is the most resource-dependent country in the world, according to the World Bank, while commodities account for nearly 60% of its economic output. When we come back, we'll continue this program. Do stay with us.